It's March 26th, 2024, and I'm taking a look at gold here. I'm going to show you this price structure that I see. I'm going to use the GLD even though I don't really like it, but it serves the purpose for analyticals. So here's this cup and handle, the cup, the handle. Most people aren't familiar with this. Maybe they read it like in a technical analysis book or something, but this is really from Bill O'Neill. So the price structure is one thing, but you also want to see this volume, right? So when you have these declines from the first high right here, you also want to see that coincide with like a general decrease in the volume trend down here. Okay, and then you're going to want to see these increases in volume, right, on the up moves, right? A general kind of an increase in volume here, right, on the up moves, okay? Look, and then big green volumes all in the big high price areas, okay? And most importantly, on this breakout right here, you're going to want to see like a big volume, okay? Some kind of volume has to show you that this breakout right here has got some real institutional interest behind it. Without that volume move, this breakout, it doesn't mean as much, if anything. So again, we've got this nice price structure with the cup on this consolidation and then this super tight consolidation in the breakout. And now let's see what the psychology means in regards to this price structure. First, you need an uptrend. Everyone's buying, everyone's bullish. This is self-explanatory. This was back in 2012, 2011, okay? All the way before 2013. It peaked out, okay, 2013. This was during the Obama administration. I think we had the BP oil spill right around here, and then the Justice Department started suing Goldman Sachs somewhere in this general area. But what they really did is Bernanke started QE3, I believe, and gold was in the headlines every day up here. It was just rampaging higher, and everyone was bullish. I mean, all up and through here. Retail got involved. After the big run-up, you had this lower high right here, right? Look at that one right there. You've got a lower high, okay? And then you had the breakdown right there, okay? Down move that ends right around 2016, same time as the Trump election, okay? Now, this sideways move that you get afterwards, where gold is just kind of consolidating around in this range, flying around, okay? This is chopping and churning, and all the guys who bought up here and over here and way up here, and maybe even some guys who bought here but didn't sell, okay, on this breakdown, right? They're all now getting chewed up, and they're probably selling down here, and maybe they're thinking the breakout is coming, so they're buying up here, and then again they're coming in as soon as it comes down, they're selling up here, right? So they're just getting chopped around all through here. And while all this is going on, they're getting chopped up, they're losing interest, okay? They're losing interest, the thesis isn't playing out, they're not making money. So when you get this little move up, okay, right there, a breakout, nobody's interested, nobody cares, you get a little bit of a swoop down, rally up, the March 2020 crash, and then boom, back up to all-time highs, okay? But this move up to all-time highs gives all these sellers a chance to get out, right? All the guys who are doing the right moves and buying here and here, right, institutions, gives them a chance to sell up here under the exuberance, right? And now gives them a chance to see what the price does at the highs, how price reacts. So the institutions now, maybe they sold some up here, but what's going on now in this little handle area, okay, you get that, right? It shows them that price is coming up for a second run at the highs, but it's not ready yet. So all this while, patient investors are seeing this price structure form. It's getting bullish. This looks very bullish up until this last little one here. And the key right here is this little down angle at the very end. I mean, that is what you want to see, that little bit of tightness right there. okay? That tightness is showing that interest is not to be found. I mean, it's unemotional. This little tightness, it's not volatile, okay? Like, this is volatile action, right? You don't want to see this in the little handle area at the furthest point in the little handle. You don't want to see moves like this. What you do want to see before a big move is a nice tightness like that. See that tightness? And then you get the move out, okay? You always want to see that tightness. And look, back here, what did we have? We had a little bit of tightness before you got this last move out, okay? So when you get this tightness, that's what you want to see, because it indicates that the psychology is not emotional. It's in a wait and see attitude. And then when you get this breakout, now that's your signal, right? This little setup here of the tightness, that's your setup. And this breakout on the high volume is your signal. A signal of what? A signal that institutional money has now waited for this entire price structure to develop, and they have determined that it's now go time. They want on board, and they're buying this breakout above 2,000. This thing, what you want to see is some nice big volume days coming in here. Something like this in a cluster, right? I always look at these volume clusters of the big green. See, this is like a cluster here. It's kind of like a little bit of a cluster. Here's a longer cluster, right? Here's a little cluster of all green up in there. You're going to want to see more of these green clusters, right? Look, here's a red cluster. You don't want to see, like, look, this, it means we're not there yet, right? That's not a good thing. See that red cluster right there, and look what happened, you know? It was a timeout, right? The rally just kind of fizzled and went sideways for a little while. So red clusters bad, green clusters of volume good. On this breakout, all right, I think this 2,000 level is ready to go. This one is right here. Okay, again, this is the GLD. So what you can do, I don't like the GLD, but you know, you can pick whatever poison you want here. Maybe we get some kind of a gentle little pullback here on kind of big volume. Wouldn't freak me out too bad, but I would expect that in a hurry. Right now, you could put a little stop somewhere around here at, call it 180 or on the GLD, but kind of like maybe 1800 on the gold. So that's like 10% lower. If it starts to really trade through this 180, I mean, this whole analysis on the psychology is just wrong, right? It can be wrong, but you want to put a stop right there so it doesn't, you know, give you one of these. I mean, you know, because look here, if this thing just started to actually fail here and then go down, I mean, what you're talking about now is like a, like, you know, well, that's a double top, right? You know, you got this, and then you got a failed breakout. So definitely, if you want to get involved, keep a stop right in here. But otherwise, the psychology, price structure, everything looks good. I'm bullish. You should be bullish too. Thanks for watching.